I'm here at MPE. It's another fantastic day. Sun is shining in Berlin. I'm here with Praful Morar, Deputy CEO of PayFuture. Praful, nice to meet you.
Thank you. Alex, thank you for having me. Praful Morar, Deputy CEO of PayFuture. Super excited to be here. Thank you for having me, Alex.
Pleasure. So we're going to kick off with cross-border payments. I think there's been an awful lot happening in that area and it's getting better and better. But do you feel like it's gone far enough as yet?
So what's interesting is that a recent market research that we've had from JP Morgan says that 87% of payments are cross-border today. So it's already very high percentile, but we can go further because it requires a lot more other regulatory requirements within the business. So at this stage, quite high percentile, but there's a lot more to be done.
Okay, so let's move on to payments localization.
Yes.
I think this is a term that people hear and they think they understand it, but what does it really mean?
So it's interesting because there's this words that people use, which is globalization versus localization, and what's the difference? Now, in essence, big organizational companies want to use their infrastructure they've created on a global scale, and they think that they can actually localize that. But the reality is that when you go into emerging markets, cross-border payments, you really need to understand the market that you're going into. And in essence, there are three things that you really got to focus on. One is market intelligence, to understand what is the market, language, culture, behavior, payment types that are relevant. Compliant, so being compliant with the regulatory licenses that actually meet it. And then resilience. So when I talk about global versus local, you really got to understand the market that you're entering, emerging market in particular. You really must know what you're doing in that market, how you're doing it, from the moment you have the user experience of payment to the moment that the actual user has paid for the item and the merchant's received it. Every point is important for the localization of that particular transaction.
Okay, so is the local versus global debate, are we through that, or is there still a debate to be had there?
It's a great question because I believe it's a combination of two. You have to have a situation where you combine the two intelligently, knowing that you are on a global business, but you have to know that your users are local. And to give you an example that we play in as PayFuture, we look at the Indian subcontinent and the Middle East, North Africa. So Indian subcontinent is India, Pakistan, Bangladesh. You will then have the Middle East, North Africa countries. In those specific countries, they come with very specific nuances. India, you can use UPI as 90+% of the actual transactions, whereas cards are very small. But the global stage, cards are huge, but local payments could be small. So it's that combination has to come together intelligently. And that's what I think we are trying to achieve as PayFuture, bringing the large scale to a local scale and bringing them together intelligently.
Let's move on to fintech in general. What are your views on profitability and infrastructure, and how are those two elements helping drive expansion now?
Okay, this is one of the hardest questions I believe that any merchant, any company that actually does things, because to do things compliantly requires infrastructure, data protection, risk management, money laundering, MLRO requirements, regulatory licenses to trade within the country you want to go, versus profitability, which is generally speed. My view is that it's not having multiple providers, 5, 6 providers trying to do one particular market or region. It's more about having that intelligence to go with 2 or 3, knowing that you can look at the waves of profitability versus cost in each of the markets that you're actually going into. So it's a difficult one, Alex, for me to answer for you, but the challenge is knowing what you're spending, knowing what you're generating, and having the right products for your users to pay with. That drives profitability.
Okay, understood, and thanks for that. And I think finally we're going to talk a bit about liquidity, which I often find is one of those, everyone knows what it is, but I think it's probably underserved a little bit, or at least people don't really, they don't spend too much time with it. So what is your thoughts on how liquidity can be managed better?
This is equally, this is another stomping question that you come up with, Alex. So my view is liquidity, specifically in emerging markets that are actually controlled by currency control requirements. Particularly, again, India has a currency control. They want to control their INR transactions and currencies in there. This particular piece requires delicate management. What do I mean by that? If you're processing in India, you may want to understand that we need to retain liquidity in country for refunds, for payouts, affiliate payouts, many types of different payouts. So balancing your liquidity in country before you do cross-border payments out or in is a real, it's a magic trick. And you actually need proper management of treasury and liquidity. A good example right now, the world is in turmoil with the Middle East. It's had a US dollar to INR, PKR, Naira impact. That instability has caused problems, and therefore liquidity has problems. So you really got to look at the world stage, regional stage, and domestic stage to really manage your liquidity. On-land liquidity is very powerful versus off-land, because the reality is you've got to make sure cross-border payments are happening and relevant to the time of when you need to make payments. So it's a very challenging part of our business.
Brilliant. Thank you very much, Praful.
Thank you.
Pleasure.
Thank you. Cheers.